It has been a very, very hostile environment over the last at least 7 years that I've been working in the industry, and from what I've read for the last 10 to 12 years, in banking, in not being able to secure insurance, not getting support that you would get if you were a traditional financial services licensee. The skills and resilience of the people who have been running those businesses successfully, that have survived the hostility, the negative press that comes from bad actors, primarily overseas, some locally as well, and have persisted, managed to work, get relationships in those key partnerships with banks and financial services providers, insurers, to be able to continue. They have to be the best people that are able to run a licensed business. Now sure, there may be some technicalities when it comes to licensing, where the activities that are being undertaken by the businesses now, they are very similar to what ASIC is now deeming to be a licensed activity. So those people, in my eyes, have X number of years, however long they've been in that role, of direct experience in dealing with that. There may be some parts around the edges where there might be some technicalities within law, where there's some additional elements. I'll point to things like custody, where you've got to have your custodial reports, and you've got to provide reports on a monthly or quarterly basis to say, here's how we hold the customer assets and here's the breakdown. Those small areas can be dealt with in a transitional environment, very similar to what ASIC does when there's changes to Corporations Act. They generally give a 12-month non-enforcement period, and they say, great, it'd be amazing for ASIC to sit down, talk to the executives at each of these organisations and go, great, you have this huge breadth of knowledge. There are some other elements that are required. We'll give you 12 months, as long as you deem that your current processes are up to scratch and the customers and client monies aren't at risk. I can't see why that's not a viable way forward.
I think the key thing that banks are looking for in terms of providing banking services to digital asset businesses is clarity and regulation. And so the extent to which the regulatory environment can provide that clarity will enable and facilitate banks to participate, rather than issuing a one-size-fits-all assessment of the industry, which is in place at the moment. It's very much about assessing businesses on their merits, especially those businesses that are licensed. So that regulatory clarity will be the thing that is the big unlocker for banking services.
There's obvious impediments that we can influence, even things like the FATF regulations that kind of deem this industry a high-risk industry. And that therein leads to issues with banks. Getting banking rails for Australian operators, and certainly even the big global international operators, it's difficult. So that's a serious impediment. We are wasting a lot of money just trying to get customers money that they are educated on, that they have worked hard, that they choose and they know exactly what they're doing, onto our platforms. The banks don't want to support much of the industry from that point of view. So you've kind of got this traditional operating system of the financial system, and you've got the new digital. The technology can make the two speak. It's just people that are stopping that happening. So that's a definite impediment from it. The conversation that's currently sort of happening back in Australia, I think ASIC took a long time to come out with their new info sheet 225. I think the way in which that has sort of happened, the dialogue and the back channeling that's happening there between what the politicians are saying, this makes us in Australia as operators somewhat nervous. We want to be able to do the right thing. We want to comply with the law. We want to offer our customers a great experience, but it's hard because there is so much uncertainty around that. The independent professional advisors, the legal counsel, are quite reluctant now because they've given advice in the past, and yet that's been overturned and there's been legal cases with that. We don't want a situation where we've got legal cases really determining the future of the industry. I think that's unhealthy. It's unproductive and it's just wasting a lot of people's money and time. So they are some of the impediments that I would call out in the first instance.
The major suppliers of banking services in Australia have been reluctant to sit around a table with individual providers and really dig into what they do to protect consumers, make sure AML/CTF Act is being complied with fully, make sure there are appropriate limits in place, customers have the appropriate disclosures, and also share information. I'm from banking. I spent a long time doing banking. I know banks have sophisticated fraud models, and I completely understand why a bank is reluctant to a major bank is reluctant to partner with a digital currency exchange, because then carried with that is the implied endorsement that that is a safe and reasonable business. And if a customer does fall victim to some kind of confidence scam or romance scam or peak butchering scam or something like that, or investment scam, that bank is then compelled for social pressures and their internal operations to compensate those customers in some certain circumstances. And I can completely understand why a bank says, well, this is my brand and my business, I don't want to compromise that. Completely understand that, respect that, it's a private enterprise. But why is it difficult? It's because we don't have an environment where a large financial organisation is willing to sit around the table and go, we'll take a risk, a good risk, after we go around and look at people and how their operations are. How do you run your business? I can use some of the information that the bank can provide me, say this is what we see, these are the patterns that we see. I can then do exactly the same, and two risk and fraud prevention teams working together and compliance teams working together has to have a better outcome for customers than us trying to do it in the dark. And then banks over there saying, well, I'm not going to bank with you, which forces customers to say, well, if I'm banking with, I'm not going to say any names, I'm banking with major number one, they're saying I can't put money into digital currencies. I want to, I'm a consumer, so I will use lower tier bank. I'll send my money from here to lower tier bank and then to the exchange. So we're not actually doing anything. All we're doing is making it so major bank one doesn't have to compensate the customer. There's no better outcome here for the customer. Whereas if we sat down at the table, shared information and looked at better ways to structure things and where interventions work, where the bank sees interventions working, where we can share where interventions work, there's got to be a better solution if we work together. Why is it difficult? Because we can't have that conversation. I would dearly love for them to say, here's what it says, wipe away the names, these are the transfers, these are the dates, these are the ones that we have questionable, so just give that to me on a monthly basis and let me dig into it. And then I can come back to that bank on an ongoing basis and say, this is what we're doing, here's what we saw, this is the information we have from the customers, they told us this is the information that we have, here's the on-chain monitoring that we did, here's the disclosure that we gave to the customer, here's the answer that we got from the customer. And if we did that on a regular basis, I think that banks would be more comfortable. By having such a closed door policy right across banking, we're creating a concentration risk that's got to be worse for customers. I can't possibly fathom that there are 150 DCEs in this country operating poorly that are a bad risk for a bank. The customer's money is getting to those DCEs anyway. If there is a concentration risk, and banks don't do this, don't support the industry as a whole, one incident could have far-reaching consequences for literally millions of Australians. There are major international banks supporting digital currency exchanges in Singapore, in the UK, in broader Asia, in broader Europe. Big names, but big names who have offices in 70, 80 countries, billions and billions on their balance sheets. They're willing to have a DCE that can bank with them. That's where all that customer's money will go. That's where all Australian customers' money will go if the Australian banks don't interact more with digital currency exchanges to get comfortable with the risk of what we do.
I think the fraud and scam issue in Australia is relevant but a bit of a red herring. If you look at jurisdictions globally, there's a much more sophisticated understanding of fraud and scam activities and the extent to which crypto is used as a getaway vehicle as opposed to a cause of fraud and scam activity. And so I think it's very much incumbent on both the banks and the crypto sectors to collaborate in order to protect consumers from crypto being used as that getaway vehicle. So on the contrary, I actually believe that banks have a duty to collaborate with the crypto sector in order to protect consumers, and that includes provision of responsible banking services. A tailored risk framework is incredibly important for collaboration between banks and the rest of the industry, especially in provision of banking services, because it allows banks to be able to not take a one-size-fits-all approach and actually tailor their risk assessment to the business operations of the individual firms. And I think that's particularly relevant where firms have met local licensing requirements and therefore really present a low risk to banks. So providing that tailored framework will really help in understanding the nuances of the industry. So I think a fair banking environment is all about facilitating business, both within Australia and beyond Australia. We're seeing countries like France actually enshrine the provision of banking services to responsible crypto businesses in legislation. And it means that other jurisdictions are providing a competitive landscape, which if we don't meet and reach that level ourselves, we'll see businesses going offshore. And indeed, we also want to be attracting the biggest, best, most responsible businesses onshore. And without that, we risk falling behind in the global race for the economic benefit of this sector.